Chapter 1: The Eternal Ascent. In the shadowed vaults of eternity, where the ledgers of empires are etched into stone unyielding as fate, we turn our gaze to the year 2000. The digital colossus stirs, its veins pulsing with code and capital, unbound by the frailties that once threatened to sever them. The dot-com bubble, that fragile edifice of speculation built on promises of infinite connectivity, does not shatter. No frantic sell-off cascades through Nasdaq's halls on that fateful March morning. Instead, a confluence of will and circumstance. Federal Reserve Chairman Alan Greenspan's deft pivot to accommodative policy, a torrent of foreign capital from Asia's recovering tigers, and the sudden ignition of broadband revolutions in Europe binds the fractured lines with liquid gold. Markets, sensing immortality, surge onward. Petscom, once derided as vaporware, morphs into a logistics behemoth, its warehouses humming with drone-delivered kibble across continents. Webvan fleets conquer urban sprawl, fueled by venture floods that never recede. Valuation multiples climb not as mania, but as prophecy fulfilled. Amazon's empire expands into every crevice of commerce, its servers the new cathedrals of trade. By mid-2001, global tech indices eclipse their peaks, drawing in pensions, sovereign funds, and the life savings of millions who whisper of a new paradigm. But beneath this gilded canopy, the first tremors stir. Central banks, intoxicated by growth unbound, suppress rate hikes. Liquidity floods bond markets, yields plummet to abyssal lows. The dollar, anchor of the world, holds firm, yet whispers circulate in Davos cloisters. How long before the weight of endless printing bends the bar? In a quiet suburb of Seattle, engineer Marcus Hale watches his stock options triple overnight. His family's home, once a modest ranch, swells with additions paid in equity. "This is the future," he tells his wife over dinner, as their children play with the first tablet prototypes. They do not yet know that this wealth, like all before it, carries the seeds of its own unraveling. Chapter 2: The Floodgates Unchained. Years cascade like unchecked torrents. By 2005, the tech leviathan has devoured traditional industries. Silicon Valley's alchemy transmutes steel mills into server farms. Detroit's assembly lines yield to autonomous fleets coded in Mountain View. GDP swells. America's at 5% annually, Europe's at 4%, China's at double digits as it pivots from factories to fabs. Unemployment vanishes into myth, replaced by a gig economy of coders and creators, their labors auctioned in real time on blockchain bazaars. Yet the monetary spigot, turned full bore, erodes the foundations. M2 money supply doubles, triples, unchecked by inflation's specter. Deflationary tech miracles suppress prices, or so the models insist. Housing bubbles inflate in tandem, collateral for tech-fueled loans. Banks, gorged on fractional reserves, lend into the ether. Mortgages bundled with AI patents, derivatives squared on data streams. Lehman Brothers, far from collapsing, pioneers perpetual growth swaps, instruments that bet eternally on ascent. Behind vaulted doors in Basel, the Bank for International Settlements convenes in shadow. Emergency protocols, dusted off from forgotten crises, lie ready. "The system is too interconnected to fail," murmurs a Swiss director, as quantitative easing becomes permanent policy, veiled as innovation stimulus. In Mumbai's teeming slums, Priya Patel, a former textile worker, codes micro-apps for global clients from a rooftop shack. Her remittances build a school, her village tastes prosperity. But the rupees in her account buy less rice each month, though no one speaks the word, inflation, aloud. And this was still the golden age. What hidden fracture would the markets fail to price when the bubble's breath became the world's air? Chapter 3: Cracks in the Firmament. The year 2010 dawns with omens ignored. Commodity supercycles ignite, oil at $150, copper and rare earths rationed for data centers devouring the earth. Supply chains, stretched taut across hemispheres, fray under demand's lash. China's ghost cities fill not with residents but with server crypts. Its currency, pegged to the dollar's endless print, buckles subtly. Bond vigilantes stir from slumber. U.S. Treasury yields, long suppressed, twitch upward as investors demand recompense for debasement. The Fed counters with Operation Infinite Flow, trillions bought back, sterilized in digital vaults. But the alchemy falters. Velocity rises, dollars chase finite goods. CPI ticks to 3%, then 5%, dismissed as transitory tech lag. Corporations hoard cash in offshore havens, their balance sheets bloated with unbooked gains. Apple, now a sovereign unto itself, issues its own I-bonds, yielding more than Uncle Sam. Stock buybacks eclipse dividends. Executives, paid in options, steer ships toward nominal infinities. In rural Iowa, farmer Elias Grant stares at his ledger. Corn prices soar, but so do his tractor parts, shipped from fabs in Shenzhen now idled by blackouts. His bank account, swollen with ethanol subsidies, buys diesel by the gallon less each harvest. The machines promise abundance, he mutters to his son, but the soil knows scarcity. Institutions whisper of contingencies. The IMF drafts global liquidity accords, pacts to synchronize printing presses. Yet currencies diverge. The euro weakens, the yuan surges, then stalls. Escalation teases at the edges. This policy elixir, once panacea, now poisons the well. Chapter 4. The Velocity Reckoning. By 2015, the illusion cracks wide. Hypervelocity money slams into real walls. Import costs explode. Electronics from Taiwan triple in dollar terms as the NT unpegs. Grocery aisles in London empty. Fuel queues snake through Paris under ration slips. Inflation roars to 12% in the States, 20% in the periphery. Banking stress metastasizes. Reserves, diluted to whispers, trigger runs. ATMs in New York dispense limits, $200 daily, then $50. Depositors, pensions foremost, besiege vaults. JP Morgan activates firewalls, but shadow banks, fintech unicorns turned lenders, implode first, their peer-to-peer loans collateralized in vaporware. Policy shifts cascade. The Fed hikes to 10%, shattering debt pyramids. Corporate defaults ripple. GE's empire fractures, Boeing grounded by unhedgeable fuel. Markets plunge 40% in weeks, not from bubble burst, but from its eternal inflation. Social fissures widen. Truckers blockade ports in Rotterdam. London's cabbies torch Uber depots. In Sao Paulo, favelas erupt over bread priced in memories. Governments impose capital controls, Venezuela style but global. The dollar, once king, loses 30% to a basket of gold-pegged rivals. In Tokyo, salaryman Hiroshi Tanaka queues at dawn for rice allotments. His lifetime at Sony, vested in stock, evaporates overnight. His daughter's university fund buys textbooks only. "We built the future," he tells her, "and it devoured us." Behind closed doors, G20 summits fracture. Germany hoards gold. Japan nationalizes tech giants. The one decision no model predicted, a unilateral Eurozone exit by Italy, looms, its shadow lengthening. Chapter 5. Currency Armageddon. 2018 marks the fracture point. Hyperinflation spirals, Weimar echoes in the West. The dollar, printed into oblivion, trades at 50 to the euro 1 month, 200 the next. Bond market seize. Yields spike to 25%, pensions wiped clean. Central banks resort to helicopters. Direct cash drops, met with riots over unequal algorithms. Trade wars ignite anew, not tariffs but seizures. U.S. Navy escorts grain ships from Black Sea choke points. China's Belt and Road becomes a fortified artery. Yuan rails guarded by PLA drones. Black markets thrive. Bitcoin surges to $1 million, then crashes as miners hoard power for heat. Civil unrest metastasizes. France's yellow vests evolve into red brigades. U.S. cities impose curfews amid looting waves. Governments fall. UK's Tories, rooted by nationalizers, Biden's successors invoke emergencies mirroring Nixon's shock, but without gold to sever, only fiat to confess worthless. Geopolitical fissures deepen. Russia, gas hoarding, demands rubles for pipelines. OPEC fractures along Shia-Sunni lines, oil at $400 barrel. Proxy wars flare in Africa over coltan mines fueling the last data hauls. In Buenos Aires Redux, teacher Maria Lopez barters lessons for eggs. Her savings, hyperinflated to confetti, fuel a black market candle trade. Families huddle by wood fires, screens dark without grid power. Within 5 years, this single monetary unraveling would redraw maps in blood. And still, the old guard clings. This was merely the prelude to true fracture. Chapter 6: Unrest and Extremes. The 2020s dissolve into tumult. Social fabric rends under scarcity's blade. Empty shelves birth militias. Fuel rationing strands armies. Salary devaluation strikes overnight. January pay buys January bread. February's a luxury. Black markets supplant supermarkets. Cryptocurrencies bartered for bullets. Political extremism blooms in the vacuum. In America, the tech purge party rises, promising nationalization of FAANG fortresses. Europe's Greens morph into resource autarchists, sealing borders. Leaders emerge from the fringes. A former coder in the White House decrees equity reset, seizing algorithms for state AI. Military logistics crumble. U.S. carriers idle for unbuyable parts. Russia's Wagner Legion seize Siberian rare earths. War's proxy into resource grabs. Yemen oilfields become eternal sieges. Taiwan fabs raised in preemptive strikes. Human stakes sharpened to knives. In Manchester, that retired couple's pension yields a week's groceries, then a day's. They join allotment communes, tilling what was lawn. Globally, billions migrate inward, cities hollowing as rural barons hoard. Institutions fracture secrets. Leaked cables reveal Fed vaults emptied years prior, gold swapped for digital ghosts. Escalation whispers. The stable period ended when bread riots toppled Rome anew. But what cataclysm would unmake nations, birthing order from ash? Chapter 7: Geopolitical Reckoning. By 2030, the world splinters into currency blocks. The digital dollar zone, US, Canada, Australia, pegs to a basket of patents and power. Eurozone remnants form the resource mark, gold backed amid German mines reopened. China's silk yuan dominates Asia, enforced by island chains claimed anew. Wars erupt not over ideology but inputs. The Arctic Thaw War, NATO-Russia clash over melting rigs, navies locked in ice floes. India-Pakistan nuclear brinkmanship over Indus water, halted by mutual famine. Africa balkanizes into warlord fiefdoms, coltan barons arming with smuggled drones. Systemic transformation accelerates. Corporations devolve into city-states, Amazon enclaves in Seattle, walled with fulfillment drones. Governments devolve debt via crypto serfdom, universal basic compute, rations tied to loyalty apps. Families adapt or perish. Marcus Hale's descendants, now in communal server farms, code for survival script. Priya Patel's Mumbai school becomes a barter academy, teaching hydroponics over HTML. Behind elite bunkers in New Zealand, the last venture lords plot Phoenix protocols, seeded arcs of seed banks and silicon. Yet the chain reaction, policy to powder, consumes all. This fracture presaged the new order forged in fire unquenched. Chapter 8: Forging the New Order. 2040 ushers the Phoenix. From rubble rises the Equilibrium Compact, a global pact born in Geneva's ruins. Currencies unify under Neo-Horus, a hybrid of blockchain gold and capped compute. Central banks dissolve into algorithmic councils programmed against excess. Economies realign, tech tempered by tillage. Vertical farms supplant cloud farms, fusion labs unlocked by crisis collaboration, power rationed grids. GDP measures resilience quotient, not growth but antifragility. Power realigns to the resilient. Scandinavia's models export southward, communal tech trusts owning the means. Africa's resource kings federate into caliphates of copper. America's heartland rebirths as agro-holds, Silicon exiles integrated or exiled. Legacy echoes in daily rite, annual bubble vigils, where elders recount the ascent's peril. Military pacts enforce scarcity doctrines. Black markets evolve to gray guilds, regulated shadows. In this world, Hiroshi Tanaka's granddaughter tends fusion-tended fields, her tablet a tool of tillage. Elia's grants line farms drones that farm themselves. The bubble's ghost lingers, prosperity cautious, ever watchful. Chapter 9, Echoes to Eternity. By 2050, 50 years from the averted burst, the chronicle stabilizes. Global population plateaus at 8 billion, sustained by engineered equilibrium. Tech serves, not rules. AI oracles bound by human veto, markets capped at sustainable multiples. Yet the archive warns. Ascent eternal breeds hubris eternal. Neo-Oris trades steady, but whispers of Bubble 2 stir in quantum labs. Families prosper modestly. Workers own stakes in local nets. Governments, lean stewards of soil and spectrum. The human cost tallied. Billions scarred by the velocity storm. Nations redrawn, wealth cycles reset to humility. Weimar's ghost, 2008's echo, Nixon's severed gold, all converged in one unending bubble, burst not by prick, but by its own immensity. In the eternal ledger, this tale endures. Prosperity's peril lies not in crash, but continuance unchecked. The markets, in their wisdom or folly, had priced everything, save the weight of forever.